The US dollar, we are faltering again at the upper part of this range, is key area of liquidity around the psychological 99.50. It's been penetrating it. You'd feel like it's just a matter of time before we get that big breakthrough and push to the upside and be drawn into that next area of liquidity, as you can see here, which would be 150. But we're struggling. Okay, the dollar's struggling. Okay, this is a significant gap area, as I say, of that ceasefire. Now, obviously, in terms of the way in which dollar goes today, is very much going to be dependent on the labor market figures. Obviously, as you know, it's NFP day, but it goes bigger than NFP. We have average earnings, which is wages. Okay, depending on what people are paying, getting paid, that's obviously dictates inflation as well. Imagine if people getting paid more money, what do you think you're going to do with that more money? They're going to go spend that money and obviously stimulate the economy, stimulate price of goods and services, right? So that would be inflationary. If that comes out stronger, that would be dollar positive because it would mean this probability of rate hikes, which has dropped again, sub 50%, that would increase. Okay. The probability of that would increase. If a hike probability is increasing, that's a dollar positive. So if the number is higher today, it's very possible that we should push above. Okay. Should push above this area of liquidity. It's a very key area. But in terms of sustaining that move, we'll see. But what you'd want to see in terms of being able to sustain that move is eventually pulling back, which would be next week pullback. If we're going to have a pullback, we tap that, even if it's just a wick of the candle, and then we carry on and push to the upside. Okay. When you look left at this previous price action here, what we did, we had that nice big breakthrough. We didn't pull all the way back, right? We didn't pull all the way back at all. We just pretty much went lift off. So we don't always get that pullback, but you just want, if the dollar wants to have a good chance, you want supportive macros, i.e., very, very bullish NFP today, go clear. And then obviously, I mean, it's not ideal, but a continuation of what's happening in terms of the escalation right now would also be supportive of continued buying pressure for the dollar because it's the war is inflationary, right? So we wouldn't necessarily get the pullback. We could just go straight through and then push and be drawn into this next area of liquidity, 150. If the number's bad, guys, poured the batch of data, we're just going to come and drift back in this range, the lower part of this range. If it's really bad, it's also possible we do something like this where we wick, but then the following session, like we briefly come below, we stop hunt, and then we come back above because it won't be enough. The NFP specifically alone will not be enough of a catalyst to break dollar out of this range to the downside. Okay. The only way the dollar breaks out to the downside is if we get a peace deal between US and Iran, which is not going to be happening anytime soon.